About how their numbers have been. But let's now talk to the Group CFO at Endurance Technologies. We've got RS Raja Gopal Sastry joining in on the show right now. Mr. Sastry, great to have you today on ET Now. Thank you so much for your time. I want to first talk about, the fact that in Q3 you had guided for a meaningful margin improvement through better product mix, localization, and higher share as well of four-wheeler non-auto business. What is the sustainable EBITDA margin trajectory you now see for FY27?
FY27 has got quite a lot of uncertainties, as you would see, because the commodity prices are going up, and we are working with our customers to ensure that our pass-through mechanisms are working. So there would be pressure on the margins, but we are also have kicked in significant level of projects in FY26 to counter the effect of the commodity increases and also other ramp-up costs which we had. And they're already yielding some green shoots, as you would see in the Q4. Despite a significantly lower booking of our incentive income, we still managed to flat to slightly better margin performance. So we are very optimistic about FY27, subject to the macroeconomic aspects of commodity inflation and even other conversion cost increases as we are seeing.
Said that motorcycle OEMs have guided for a muted growth, right, in the first quarter of the fiscal. What is your outlook there?
We had a very strong FY27. The second half of FY26 was very strong, as you would have noticed. And we see that momentum is carrying forward. Against this larger base, probably they are looking at muted growth. But what we are seeing is the quality of offering is improving, especially for us that the recent GST reduction has actually resulted in our customers going in for a better offering in terms of better technology. More higher CC vehicles are coming in, which means our suspensions and the brakes are better. So we are seeing a good addition to the content in terms of its quality and its realizations. I think that should offset the number growth.
You have said that in FY27, because of the trade agreements with UK and Europe and US, and along with strong domestic demand, you expect a good momentum coming in FY27. Given the fact that we have a West Asia crisis, we have a raw material price increase which is there. What is the kind of growth that you see and the cost increase which is coming in? Are you able to pass on to the OEMs as well?
So multiple questions in that question. So one is, I'll take the last one first. Yes, there is a significant pressure on commodities. And our agreements indicate that we pass it on to the customers, and some of them on a real-time basis, some of them with a lag of a quarter. And we do have a back-to-back arrangement with our vendors too, that when we get it from customers, we give them. But what we are doing is we are acting a bit responsibly here, ensuring that our vendors are not drying their cash reserves, and so that we are supporting them even ahead of what we get from customers. But that is ensuring that there is a consistent and continuous supply chain, which I think is more important from a strategic and a long-term perspective. Yes, the pressures are there. We have very clear agreements with our customers to pass it on fully. But there is also this aspect of what we have to do internally. There are numerous projects which we kicked off in 26, and many other projects we are now doing in 27. FY27 will have their impact on the overall cost trajectory. Now, about the export market, we are a very local for local company, and these trade deals definitely will mean that the capital goods and other aspects as we would need would have a free movement, and that would help us produce more in India for the Indian market. But it will have a positive view, but not in terms of direct exports or direct sales to the other geographies.
I also want to talk about ABS and what this opportunity throws up, because you had earlier expected regulatory clarity by end of Q4. What is the latest status, and how should investors think about the revenue and margin impact under both ABS as well as ECBS?
Look at ABS for two-wheelers as an independent must-have for two-wheelers. That's how we should look at, because that will ensure that the vehicles are safer. And what is very important is that we need to save lives. With that, and we already have vehicles which are greater than 125cc, it is mandatory to have anti-lock braking systems. And we are seeing that the offerings of the OEMs also are going towards premium offering, and which will mean that they will go past the 125cc. So independent of regulation, we are seeing that the anti-lock braking systems and the hydraulic brakes and the disc brakes which we offer will anyway have the demand, and which kind of will be good because we are setting up some capacities for anti-lock braking system, doubling the capacities there, and we see that demand will anyway take over.
You spoke about capacity additions, 4 plants coming up in FY27. How much of capacity will that increase? And if you can quantify, given that you have already order books, what is the kind of revenue potential these plants will bring in, maybe in FY27 partially and maybe FY28 fully?
So just to give you, break it into its details, we have this plant in Auric Shendra region for especially catering for four-wheeler business. And it already has one orders with a peak annual revenue potential of in excess of 500 crores. We are putting up a battery pack plant, which will go into its job one either this month or the beginning of next month. And this already has got an order of 300 crores with the potential to reach 600 crores. Addition to this, we have put up a alloy wheel plant, which in Q2 of FY27 will reach its annual potential revenue of in excess of 5 to 600 crores. And then we are now also setting up another plant in Chennai region to make brakes, and that will go into job one in the beginning of Q2 FY27. And even that we are seeing it's very positive because we will be supplying to the customers in that geography in the southern part of India from that plant. So overall, the good news is that all the investments we are making in these new additions are already yielding results.
The motorcycle OEMs have guided for muted growth in FY27. What could be the impact on you because of that?
So in our business plans too, we have looked at growth at very conservative numbers. But what is helping us is that pretty significantly high order book, which like we got about 1,586 crores of orders in FY26. Interestingly, the quality of the orders is very good because more than half of it is for four-wheeler and non-automotive business. It also includes this battery pack business. So we are growing with our content with our customers. So even if there is a muted growth, we will be growing because our content with each of our customers, which has a significant headroom, will grow.
What is your strategy for premiumization of products here? Are you looking at fresh capex or fresh capacity addition in that area as well?
So if you would notice, last year we had a capex of greater than 800 crores. This year too, we are expecting a similar number. And we have set up a state-of-the-art suspension R&D plant, which caters to both the two-wheelers and four-wheelers. We are offering high technology suspensions. Let us say the inverted shock absorbers, or we have this gas filled and the liquid filled shock absorbers, electronically controlled shock absorbers. So in suspension, in brakes, we are also working with some technology providers. We now own the technology for anti-lock braking system for two-wheelers. We already have a partner for suspension for four-wheelers to give us technology. We are scouting for a partner for four-wheeler technology. We have won orders with four-wheelers for drive shafts. We have won orders for foundation brakes in four-wheelers. So overall, we realize that premiumization is the way forward. And we also supply to KTM, and KTM is making its way back to becoming a strong company again. And there again, it's very high technology offering, which are also leaking into the Indian market. So our way is with a well-invested R&D, right from castings, for brakes, for suspensions, for clutches, and also now for the electronics and the brake battery packs. We are very keen to continuously upgrade our technology because that is the only way we can continue growing in this market.
Shastri, you cater to the two-wheelers and the four-wheeler market there. Between them, which are the clients who are growing faster? And because they are your clients, you can give us a sense of the kind of growth they're projected, and you have to supply to them as well. So which are the clients who are growing faster, and which are the clients who have said that there is a muted growth coming in this year?
See, I will disappoint you by not answering this directly because really have to ask the clients as to what they feel. But even for me, it's a second-hand information. But what we see on the ground is that every client has got their own unique way of growing. Some are expanding with facility capacity, some are expanding by better offerings, some are expanding their export markets, some are just going ahead and saying where is the gap available. So every client is very different in their approach, but all of them are working in the current market scenario, and that's interesting.
Do you think that what percentage of your portfolio is coming from ICE and what percentage coming from electric vehicles now?
So if you see our percentage of EV revenue is equal to the EV vehicles produced because our offerings, except for a very small portion, about 6% of our total revenue comes from clutches. Everything else comes from products which are EV agnostic, right? From the castings, unit castings for both EVs and also the ICEs. Suspension brakes are needed for both, and we cater to both the powertrains. So, and now we have started brakes also. So I think as the EV share of the total vehicle production goes, we will be growing in the same ratio, actually better because now we are adding the battery packs also.
And is Europe going to give you a significant amount of revenue push also this year in FY27?
FY26 was very good. We grew 52% in the last quarter and full year about 45%. That's also because of the acquisition. So Europe is very strong for us in terms of the way we manage the business. We keep our costs low, we keep our investments low, but we grow inorganically by acquiring companies after carefully studying them. So there will be growth and inorganic growth in Europe, which will ensure that the growth in terms of top line is continuous.
Mr. Sastry, it was a pleasure talking to you today. Thank you very much for joining us today on ET Now.
I should.
That was endurance management. We'll step into a break and we'll come back after that.